Hello, everyone, and welcome back to the world's best investing podcast. I'm having a great time doing deep dives in Iron, Oscar Health, now Sita, which is a marketing company, which I think you guys are going to find fascinating. And these companies are really interesting. But today I want to talk about Palantir. Palantir is now trading above $150 per share. As many of you know, I'm an early investor in this company, having gone long Palantir since $7. I'm obviously up big time. And, for me, it's not easy. I've said many times on X that it's harder to hold stocks when they go up than when they go down. And Palantir is really quite the extreme case. In just a few years, the investment is up over 20x right now. It's worth millions of dollars, having started in the low hundreds of thousands of dollars range. So it's done very well. Now, many investors tend to think that this is a bubble, and I'm absolutely open to that possibility. But in today's video, I'm going to break down my logic for why I continue to hold and why actually in my mind it makes a lot of sense that this company has 100x potential, just to say a number. It could be more than that. That is because Palantir is the plumbing for AI. In order to do something useful with AI, you need to aggregate data in an orderly fashion in order to be able to plug it into algorithms so that they can learn from your data how to automate things. Now, what's interesting with Palantir is they've been focusing on digital twins, which is the software that enables to do just that for decades before anyone really cared about AI or making sense of data. And so what's happening now, the reason that Palantir's share price is up so much is that ultimately free cash flow per share is rising fast. And that has been driven primarily by Palantir productizing its offerings, making its software easier to install so that ultimately compresses the duration of sales cycles and compresses the time to value. It just makes it quicker for you as a customer when you show up at Palantir's premises or whatever, or send them an email saying, hey, I want this software, I want this service. They just deliver value in less time to you. And so that has accelerated the business. But if you look at digital twins at their current state and sort of envision what they could be in the next 5 to 10 years, my view is that actually they are still at their infancy, meaning, of course, this software is foundational for AI. And although a lot of people are talking about, say, a 2 to 3 year bull market, etc., I actually think that this technology could scale exponentially for decades. There is no single reason for which AI stops scaling in 2 or 3 years' time. It may not continue scaling at all. But the bet I am currently making, per my qualitative impression of the evolution of the technology, is that this is going to continue scaling for a long time and very fast. So fast that, in my view, the human mind is not going to be able to comprehend it. The thing that has made me most bullish about the AI thesis broadly over the past year is that I'm seeing people develop a relationship with ChatGPT, including myself. Not that ChatGPT is my girlfriend or anything. I actually have a real human girlfriend. But I ask ChatGPT questions. I see people having conversations with ChatGPT, and it's just a matter of time before these LLMs acquire some sort of personality, obviously by design, and then they become something more than just a chatbot for people. That is the curve we are currently on. It's insane, it's crazy, but it is what's happening. And that is because simply as we add more parameters to these models and more data, they generalize and increasingly behave like humans. So actually we passed the Turing test, I'd say a year ago or something. We passed the Turing test. That's pretty incredible. And so this is scaling very fast. And as I was saying, Palantir is the plumbing. Now, Palantir fundamentally is enabling the same flywheels for itself that it's enabling for its customers. So the end goal of Palantir is to create autonomous organizations, whereby if your organization is built on AIP, the artificial intelligence platform, you can basically substitute a whole division of your company with a few lines of code, because you simply import the LLMs as objects, and you can basically, with very simple lines of code, you can just deploy these across your organization with all of your data, all the context required for the LLMs to do things. And then, of course, as I've said many times, if you spend more time coding on AIP, I assume you can actually go way beyond just substituting a division. You can actually enhance it. You can multiply it. you can make it autonomous effectively. And the promise of autonomous organizations is that as time goes by and your organization acquires more scale, it actually accelerates. So this is probably the first time in business where across the board, we do not see the law of large numbers apply, essentially. The law of large numbers means that when something gets bigger and bigger and eventually gets to a certain size, it naturally has to decelerate. The growth has to slow down just because it's big. And so this is the intuition, I would say, powering the decisions of most investors. My view is that because of the way AI is scaling and how data, if you take a single model and train it with a certain amount of, and quality of data, and then without changing the model, you sort of double the quality and the scale of the data, the performance of the model goes up by, say, 2 or more. It depends qualitatively, but what it basically means is that as you get bigger and you get more data, things accelerate. Your business, assuming it runs on AIP or something analogous like that, it gets faster, it gets more efficient. And that obviously has a recursive relationship in that it brings about more scale, more data, and then that just continues spinning. There's a number of additional dynamics that I expect to unfold over the coming 5 years. The main one is that I believe once your company is running on Palantir and the density of companies that you interact with running on Palantir goes up, it's natural for the digital twins to get connected. So once your many providers, for example, run on Palantir, and so do you, it's natural for you to connect some end of your digital twin with theirs. And then Palantir hypothetically goes from powering organizations to powering industries and even making the connections across industries. So the concept of the autonomous organization and then Palantir essentially evolving from a provider of digital twins to a network of digital twins is what I think makes the company's earning power go up a lot. But then, and this is explained in very simple terms, but then if you think about those two flywheels, essentially, they apply to Palantir too. So one great example of that, and when I spoke about this about a year ago, especially this Christmas, when I made that tweet about Palantir has 100x potential, full stop, from here, full stop, and it hit like 1 million impressions. What I was trying to say there is, of course, the thing of, large numbers not applying across the board, but then these two flywheels essentially applying to Palantir itself. And as I was saying, that was abstract, but now that Palantir is manifestly working on AI FDEs, AI forward deployed engineers, I think the intuition is more accessible to people. So I was talking about how much of Palantir's free cash flow per share growth to date has been driven by productization. Still, much of the deployment of the software for now requires humans. It requires forward deployed engineers, otherwise known as FDEs, which, per the way Palantir works, this is literally entrepreneurs that get sent to the premises of the customer companies and they install the software and tailor it to make sure that you as a customer receive the most value possible from Palantir software. Now, Palantir is working on AI-powered forward deployed engineers, which is a quantum leap in productization. And it basically means that instead of, or additionally to, sending you an actual FDE, a human, you get this AI system, which basically accelerates the bespoke deployment of the software. Now, do I expect this to be the last component of the productization process that gets accelerated by AI? Absolutely not. I believe this is just the beginning. But if you sort of look at the progress in the company's free cash flow per share that has been brought about by AIP only, now imagine adding the AI FDE component, it's just a quantum leap. We're talking about exponential progress. Then, much like with the customers, as Palantir deploys its software in more companies, across verticals, which we'll be talking about now, etc., that just gives them more data to accelerate the process even further. So you can see how the flywheel that applies to customers, and if you go and review what customers say about the software, it basically, they say whatever took them years to do previously now takes them days or maybe hours now. And so that same dynamic applies to Palantir, which is why I believe that although the valuation now is rich, and of course, none of this is financial advice. This is me thinking out loud as an investor. And by the way, so far I've done obviously reasonably well. For me, my understanding of the company and of that flywheel specifically, the idea of the autonomous organization applying both to the customers of Palantir and to Palantir itself, means that this company gets much, much bigger. Because if you think about the penetration of AI to date, I was talking about people having effectively a relationship with ChatGPT as a qualitative measure of how AI is scaling, but AI has barely penetrated the enterprise space. If anything, it's penetrated a very thin slice of the total enterprise in the US. And obviously, it still has to penetrate the entire US. It still has to penetrate Europe, which is very slow. It still has to penetrate most of Asia, China, which Palantir won't work with, etc. So there's a long, long runway ahead, infinite. The kind of runway I think we're talking about is sort of if you try to assess Microsoft's runway 3 decades ago or something like that. We're talking about a huge, huge runway and about this cycle of productization where the organizations, both on the customer end and on the provider end, in case of Palantir, are increasingly autonomous. I don't know what components of the equation will be productized next with AI, but I won't be surprised to see a whole bunch of components emerge over time. And then every single component scaling and accelerating beyond human comprehension. So we're really talking about technology that at the limit could be, you snap your fingers and the technology essentially bespoke deploys Palantir software for a company that no one has ever heard of, so long as you're able to plug the data into the system in a coherent manner. Now, the other thing that I think greatly accelerates Palantir from here, and we are seeing this with Anduril. I talked about an example of, I think it was a few quarters ago, Anduril explained how Palantir's warp speed, which is essentially a version of Palantir's digital twin applied to manufacturing, improved the efficiency with which Anduril was able to manage, I think it was raw components of the supply chain, so materials, effectively. I'd have to go and look at that data. I think I've tweeted that out a bunch of times. But if you think about it, warp speed is a verticalization of Palantir software, and just that's for manufacturing, allegedly drone manufacturing, which is essentially what Anduril does. And conceivably, you can imagine Palantir verticalizing their software, of course, beyond manufacturing for any single vertical in the economy, and then for the many sub-verticals within each vertical. So if you think about manufacturing, Anduril makes drones, you could, in theory, verticalize the manufacturing platform further to manufacture cups made of ceramic, microphones, PCs, cars, anything that is made in the economy could run on this software. So in the abstract, you could verticalize Palantir software endlessly. And if you combine the idea of the autonomous organization with the endless verticalization potential, you have something that in the abstract, I actually believe in 5 years' time. I was initially thinking in a 10, 15-year horizon, which I still do. But I think that AI, if it continues scaling at this speed, we're talking about a radically different world in 5 years' time, and about this company specifically being just a huge, massive giant, in that the economy is increasingly about gathering the most and highest quality data you can in order to commoditize intelligence, have more intelligence available faster and cheaper than the next competitor. And that ultimately gives you an exponential advantage because of the recursive nature of data and AI. So I was explaining how more scale gets you more data, which makes you, say, marginally more intelligent, which then affords you more scale and more data, and the cycle goes on. So I think that actually in 5 years' time, we're talking about a company that is fundamentally much bigger. This company now is valued at a few $100 billion. If you think about the implications of AI, how it's really just the epicenter of the economy, how digital twins are the fundamental enabling factor for people to actually do something useful with the models, which otherwise are evolving into a commodity, I think this company just gets a lot bigger. What I think is happening now, and again, this could be a bubble, it could be a terrible failure, etc. But for now, I'm betting that this company is actually the stock is gonna go up a lot over the long term. What I think is happening now is what we've seen with Nvidia over the past few years. So 3 years ago, Nvidia's valuation seemed stupid, and I was actually one of the people thinking, well, I don't want to chase this stock, and it's fair enough. I'm not recommending anyone chase any hot stock. I've never done that. I've never succeeded in that manner. I bought Palantir when quote unquote no one wanted it. But what I think we have now is a similar scenario in which the market is trying to price in something that is very likely to evolve exponentially. And so I believe that in 2 to 3 to 5 years' time, we look back and say, well, Palantir investors were paying just a very reasonable multiple of the year 2030 earnings. That's what I believe is going to happen. And it's motivated by my fundamental understanding of the company and of the dynamics in place. Because I believe that, and this is increasingly common in the world of business, if you think about business in linear terms when investing in AI, you're bound to get it wrong. And let me just have a sip of coffee. The blood pressure is pretty low here in the Mediterranean. I don't know if you can tell, but if it's always been the case that a small number of picks return the vast majority of your returns. Now, as the economy is increasingly network defined, in that everything is actually turning into a network, if you think about it, that dynamic is going to be accentuated. It's likely, say you have 20 picks in your portfolio, it's maybe just one that does 99% of the returns going forward. The idea that everything is turning into a network is very abstract, but let me give you an example with Palantir. I was saying these guys basically, you could say right now they're a software as a service company. But then if they go from that to connecting your digital twin with that of your providers, customers, even employees as they come to be their own organizations too, which I believe is another trend. I believe corporate employment as we know it now is going to decrease in its prevalence. Then it becomes a network. It's basically just this infrastructure that's allowing participants of the network to make sense of data, plug it into AI models, and therefore increase their degree of autonomy in a daily fashion and faster over time. Any single industry is becoming a network. We see it with Duolingo with education. We see it with Netflix with entertainment and Spotify. We see it with X with the financial system, for example. Increasingly, I think you have a lot of people making a lot of money with their work in the finance space, and they're not actually really working anywhere. They're working on X. So everything is increasingly becoming a network. In networks, you have winners that take it all. And so this dynamic is going to be accentuated. And so the market has to deal with that reality. And then you have situations like the one you have now with Palantir, in which the natural sort of logical knee-jerk reaction per our human nature, which is the product of millions of years of evolution, is, well, this thing is overvalued. And it's very stupid to say that this thing is going to get 100 times bigger or even 1,000. I mean, if you think about what the economy is on a first principles basis, it's really just humans processing information in order to figure out what action to take next, in order to maximize value per unit of input, essentially. Raw materials, dollars, time, etc. That obviously gets dramatically accelerated over the next decade as we commoditize intelligence. It's very simple. I believe that now we are in this inflection point in history in which we have a departure from we move into a very counterintuitive space in investing. And I've sort of tried to break it down in the video for you, how we have these bunch of flywheels that apply both to the customers and to the providers. And over time, therefore, this evolves into a much more liquid format. Say 2 years ago, I think Palantir was a clunky piece of software that took a long time to install. We see the installation times. Ultimately, we see the time to value compress very fast. And if you sort of project that out 5 years forward in time, it looks very different. It's a lot like Gmail right now. I mean, obviously, setting up an email account, say when it was first invented, I believe, by the US military, was obviously a very clunky process. Now it's the first thing anyone does whenever they set up a business or something like that. So we're really looking at a world which is digital twin first. The time to value is almost instantaneous. We snap the fingers and we almost instantiate the shell for any organization we want to create in any industry, any vertical of the industry, any sub vertical, etc. So that's really the world we're looking at. The thing with finance and the thing with investing is, if you want to, you obviously have to make sense of the numbers, and I try to do that. But the problem is that if you confront modern business problems, such as is this one, with a, say, CFA mentality, where 2 + 2 is 2, and things are linear, and things are, the P is high, etc. I don't think you make money like that. So right now, I'm obviously not telling anyone to go long this company or anything. I can't do that. I'm not a financial advisor. But my view is that I'm up 20x now. I believe this is gonna, 100x from here, very plausible, far more quickly, I think, than anyone could ever imagine. Do I think 100x plus is plausible? Yes. Could my position be worth, say, $200 million in 5 to 7 to 8 years' time, something like that? Absolutely. I'm actually particularly convinced that, it sounds really crazy, doesn't it? But I do believe it's very plausible. And the backbone of all of this is the AI scaling laws. Now, we had one at the beginning, and if you go back and review NVIDIA's quarterly earnings report, you'll see that we now have a bunch of them, additional ones. So I was just doing my SETA or CETA deep dive, which I think is very interesting, because you basically have free cash flow per share going up very fast and the stock price going down. And you can see the pessimism in the stock price because of the decline of the price to sales ratio. This is now trading at about 2 times sales, so very pessimistic. And one thing the CEO says, which, by the way, I like this guy, and they did one thing in their platform in 2021, which I particularly enjoyed learning about, which is re-architecting it. But anyways, I'll tell you everything about that in my next video, probably the one after, because I'll be doing Nebius. But basically, this guy said that the customers of the agentic AI studio are seeing great upside at the moment just by using one agent. But he sees them, they have a beta going on for this now, in which various AI agents talk to each other and connect and split tasks, and then just basically get done things for you. And he says that he sees exponential upside for the customers there. So that is a common theme across the board. We saw Jensen talking about this. We have the SETA, or SETA, depending on how you want to pronounce it, CEO. And it's just the thing that I think that all these scaling laws are compounding into, we basically have this agentic economy where agents effectively come to be like people, but except they don't have to sleep, eat, rest, or they don't complain, or they don't vote for socialist governments. It may actually be an accelerated path to socialism at some point. A little bit of turmoil, but we'll see. But essentially, this is just a billion fold of what we have now in terms of compute requirements, efficiency, productivity, creativity, margins, etc. I just think this is an inflection point in history, and I think Palantir is at the epicenter of it. So anyways, guys, thank you very much for joining me today. None of this is financial advice. This is just for educational and entertainment purposes only. I'm off to the gym now. So guys, thank you very much for joining me. As always, if you enjoyed this update, could you please share this with someone else? These deep dives and updates are for free. So thank you very much in advance. Take care and see you next time.